Hi guys, and welcome back to the channel. You have to have been living under a rock recently to have not seen the market decline over the last few weeks, and I'm sure it's affected every single one of your portfolios as much as it has mine. Today then we're going to hop back into Vanguard and have a look at exactly how the market turmoil that we've seen over the last few weeks has impacted my portfolio. This is going to be an interesting one. Let's hop straight in and check it out. In my last update in December, my portfolio was valued at £10,811.25, with a return on investment of 50.36%. So I was going really well, and that was largely because of the positivity of people and investors that we were moving out of COVID, getting to the end of lockdowns and hopefully moving back to a more normal world. Since then, the tables have turned, with inflation reaching up to 7%, bills increasing, a Russia-Ukraine conflict, as well as supply chain issues which are still relevant now. This has seen people running for the exits, with a number of different stocks and shares losing up to 50 to 60%, even more in some cases, in their value overnight.
Oh my God! Okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm!
Facebook lost over 25% in a 1 to 2 day period as well, and that's a very, very big company, one of the largest companies in the world. So if it's happening to companies like Facebook, it's happening to everybody. My strategy of investing is to continue doing exactly what I do, regardless of the news and anything else that's going on. I invest mainly in ETFs, and I continue to do that at both low and high prices, so nothing really changes for me. If the prices are incredibly low, I might take advantage of that and invest a little bit of extra spare cash just to take advantage of those low prices, because in the long term they'll increase even more. But things like inflation, supply chain issues and Russia-Ukraine conflict and other things going on in the world don't change my approach to investing. So I have continued to pound cost average or lump sum invest every single month into these positions, as you'll see in a moment. So let's hop straight into the portfolio and check it out. Here we are then inside my Vanguard ISA, and you can see the total value of my account is currently valued at £10,727.22. So that has declined between £90 and £100 since the last update video at the end of December or beginning of January even, despite the fact I've invested £400 in that time, so in the last 6 weeks, which shows the effect that the market moves have had on my portfolio throughout that time. With that in mind, my time-weighted rate of return has dropped from around 50% to where it sits now at just under 35%. So still really, really pleasing, but it's not where it was a month or so ago. The end of the financial year will soon be upon us, and you can see I've still got over £16,500 of ISA allowance left, showing that I've invested £3,285 into my Vanguard portfolio so far this financial year. Like I've said, that's something that I'm going to be looking to increase in the coming weeks, months and years. However, that does show that this year I've invested between £300 and £350 on average per calendar month so far. My current largest holding is still the S&P 500 with a total weighting of 36.34%. I'm trying to increase that up to 50% over time, and when I sell the life strategy in the future, that will allow me to reallocate my funds accordingly. If we click through to performance, you can see that since the inception of this account, I've invested £9,295 with a total return of £1,432.22, which is made up of both capital gains and dividend income. If we narrow that down a little bit to get a better understanding of where we're at in the short term and click on the 1 year here, you can see that in the year to date I've invested £4,065, and that's returned to me £571.24. So my yearly return on investment this year is 6.89%, which is still very, very good. It's averaging around the 7% return of the markets. But not quite the same as that 35% that you've seen since inception. But we can take that another step further, and we can put exact dates in that we want to see. So let's have a look at exactly how my portfolio has performed since I last recorded the last update. So we'll click on the date over here and we'll select the 31st of December 2021, because that's when I last recorded the last update. And if we click view, that will show you exactly the change since then to now. You can see that I've invested, as I said at the beginning of the video, £400 in that time. but my investments have returned to me negative £484.03. So in just those 6 weeks, my portfolio has actually lost 4.38% in value. As you know, I'm here for the long term, but this can be very, very scary to see, especially if you're new to investing. I don't proclaim to be a seasoned investor yet by any stretch. In reality, I've only been investing for a little under 3 years, about 2 years and 8 months, 2 years and 9 months at this point. But if you're very, very new and you've just put money in, this can be incredibly scary to see. The key thing is to not panic and don't let your psychology take over. You've invested in these things, these products, these companies for a specific reason, because you know that it's going to help you achieve your long-term goals of financial freedom, retiring early, or whatever your own financial goals are. So the best thing to do in times like this is to ignore the news, try not to check your portfolio every day, and just continue to do exactly what you're normally doing if you're a long-term ETF-based investor. We'll have a quick look at the calculations here. The important thing to note is that my dividends have now reached over £200, with me receiving £208.70 in dividends since inception, for a small charge of £16.56. I am, however, expecting charges in February, so they should be coming very, very soon, but I don't expect it to be anything more than around £5. But I'll, of course, update you in the future. We'll then, of course, as we always do with these videos, hop in and have a look at the monthly update. So you can see, as I said, since January and obviously February as well so far, I've invested £400 into the portfolio. January was a particularly poor month, with my investments returning to me negative £388.67. So even with that cash investment into the portfolio, my portfolio still lost value. And the same is true for this month so far. I'm sure if you're keeping up to date with the markets, you'll notice the 1% increases, 2% decreases, then maybe a 2% increase the next day. It's all over the place. So the really key thing, as I keep saying, is to continue to do what you believe in and continue to follow your investing philosophy and strategy. I've just had more of a scroll through the information here, and January at negative £388 is actually the largest gross loss my portfolio has ever received by a factor of 2. So it's double the amount that I've ever lost in a month, or over double that I've actually lost. And that's partly because my portfolio is now increasing in size, and obviously partly because of what the market's done recently. And this obviously scales. If this portfolio was valued at £100,000, which it will be in the future, this would have been a swing of almost £4,000 within a month. This is something that I'm going to have to get used to stomaching and just taking as part of the investing experience, because at the end of the day, that's exactly what it is. Markets go up and markets go back down again. And you can see that on screen here. You can see the individual investments that I currently hold. Obviously, I haven't got anything in the FTSE Developed Europe at the moment. That was a buy that I bought by mistake. You can see that 2 of them at the moment. So the Vanguard Developed Europe X UK is currently down 3.14% since I began to invest into it. And the FTSE Japan is currently down 4.32%. All of the rest of them, the emerging markets, the Asia Pacific ex Japan, the FTSE 100, the S&P 500, the Life Strategy, and of course the FTSE emerging markets are all still in that positive rate of return here. So 14%, 23%, 35% for the FTSE 100, largely coming off. Quite a lot of that has come from dividend payments. And then the S&P 500 still up almost 50% since investing. Something I feel I've done really well recently is increase the total amount of units that I hold in each of the funds. As you can see here, so the emerging markets, I hold 29 units of the fund with an average cost of 47.07. The FTSE 100, I hold 46 units of the fund, and that's quite nice because you get quite a decent dividend from that. The FTSE Developed Asia Pacific ex Japan, I hold 26 units of the fund, 28 units for the Developed Europe ex UK, and 26 for the FTSE Japan. And then the largest holding, of course, at the moment is the S&P 500, and I currently hold 63 units of that with a current average buy of £52.81 and a current value of £62.43. So I've made around £9.50 on average on each of the units that I've invested within this fund. Let's have a quick hop in though to the S&P 500 and see exactly what's happened to it recently. We'll select the time range down the bottom to 3 years because that's how long almost I've been investing, like I said, about 2 years and 9 months. And you can see I continue to invest no matter what is going on in the market. I managed to get in quite a lot when it was very, very cheap down here. So you can see these were valued at under £40 when I purchased them. So I've made a massive gain on that, considering that the actual value of the unit is now over £62. But continue to invest in all the way through this time as it keeps rising, and you can see this has really served me well. It means that I buy in at high prices and then back at low prices. However, you'll notice the graph over time continues to increase in value. And when we consider everything that's been going on and have a look at the dip around this sort of area and compare that down here to the COVID dip that we saw in February and March of 2021, there's no real comparison there. Yes, it's probably about 50% as bad on kind of a gross level if you're looking at the exact units value of each fund. However, we don't obviously know what's going to happen in the future, with there lots of worries about inflation, stagflation, increasing bills, decreasing wages, and everything else that's been discussed recently. So we don't know what's going to happen in the future, but the key thing to remember is that over the long term, markets have historically increased in value, and I don't see any reason why that will not continue to happen in the future. So my motto is to continue investing. So there we have it. My portfolio is currently valued at £10,727.22, and I'm continuing to invest throughout this time, no matter what happens, trying to take as maximum advantage of any really low points in the market to pile as much extra cash in as I possibly can. As always, if you have enjoyed this video, please don't forget to subscribe if you haven't done so already. Like the video, and obviously drop me a comment down below to tell me how your portfolio has been getting on throughout this time. It's been an interesting, scary time out there, so I want to hear how you've experienced it as well. I'm currently looking at changing where I hold my cryptocurrency investments, so more on that in a future video. And if you fancy making potentially hundreds of pounds of tax-free cash every single month by doing something called matched betting, check out the video up above and the link in the comments down below to a product that I use called Profit Accumulator. I've made over £7,000 since I've used it, and I wouldn't ever go back. If that sounds like something you're interested in, especially at the moment with gas prices and electricity bills going up, and you want to make a bit of extra cash every month, definitely check that in the comment down below. And with that said, again, I really hope you've enjoyed this video. It's great to be back making videos again, and with that said, I'll catch you in the next one. 'Cause I can't move on till I let go.